We're
You
live.
are live. Hello, Anna. How are you? We are back, everybody. After Hours Real Estate is back. And now we have new information for you. We have Anna Cabrales here with Cabrales Mortgage. Hello, Anita. How are
Hello,
you?
everybody. Hi, Iris. Nice to see you.
Hi, nice seeing you, ma'am. So, Iris Heredia with Momentum Realty, real estate broker. Okay, so we are back with more information to help you during these times. We understand that there's a lot of questions out there, especially right now, right? Because there's a shift in the market, or let's call it the market is normalizing as of now, right? I mean,
A
we
good
used
way
to
to put
have,
it.
¿qué, Ana?
That's a good way to put it.
Exactly. Exactly. We're normalizing it. Okay. So we used to be in a crazy market, never seen before, 2020, 2021, right? And a little bit of 2022. So
Mhm.
basically, what is happening, we used to have 15% equity that sellers were getting when they were selling their homes. Okay, so now that the market is stabilizing, let's say normalizing, right? What you're seeing on equity is probably 3.8%, okay, which is more normal how we used to be in the past before
Yeah.
pandemic. Okay, so
Mhm.
we're trying to normalize the market. So now that is the reason why you see the market being slower. Okay, so we are not selling houses in 3 days, 4 days, or bid wars how we used to have, and people paying, I don't know, 50,000, 20,000, 30,000 above value, right? So we're just talking a little bit about the market update right now. I mean, we're still selling, but we still have low inventory. But the good news is, amigos, is you're not competing with anyone anymore. And of course, sellers are more, I will say, more flexible and more willing to give a seller concession, which they were gone during the last 2 years of the market. Okay, after the pandemic. I mean, sellers were not, negotiating the price. And even the opposite, buyers were paying above market value price and no seller credits. So what we're seeing now, everybody, is we have different features, okay, because that's what we do, find resources, solutions for you to be able to be a homeowner and stop renting. Because remember one thing, this is not going to go anywhere. Okay. We cannot control the market. Okay. But we can find ways to help you become a homeowner, right? And continue buying and continue selling that is going to benefit you. And that's what we're here for. Okay. So, any questions that you might have about buying, selling, or any more or anything new in order for you to be able to buy, we are the experts. So we have Anna right here, Anna Cabrales, and she's going to be talking to about buy downs, which is a new feature on lending. Okay, so she's going to explain to you what it is that you can do, and it sounds pretty good. And even for you sellers, if you're there selling and you've noticed that your house hasn't sold, we have very good information for you as well. Okay, so not necessarily is to lower the price. So Anita's gonna be, Anita, take it away. And then I'm gonna be talking about renovation because they always ask me, what is it that I need to renovate, right? I mean, to sell a property. So we're gonna we're gonna put together those two I will say themes, I mean, real quick.
Yeah.
Okay. So Anita, go ahead.
Okay. So right now, what we're seeing is buyers sometimes are asking us, okay, what's the payment on this house? And they are getting a little bit of payment shock because they had quoted maybe before during COVID, and now at the higher interest rate and seeing that their monthly payment went up.
Mhm.
So we're getting customers that ask us the questions, what can I do to bring down the payment? What is it that I need to do to bring it down $100, $200, $300 monthly? So
Mhm.
there's everybody has heard of discount points. Discount points are basically money, a fee that you pay the investor so you get a lower interest rate. Right
Yes.
now, everybody's paying discount points. Why? Because the investors are worried that if the interest rates come down in a year or two, that you're gonna refinance. So what are the investors doing? They're charging you points now so that they get at least some money up front. So if you refinance, at least they broke even.
Okay. So
But
okay, Anita, what is the difference between discount point and buy down?
so the
So
discount point is basically a fee that you pay to get a lower interest rate, and that lower interest rate is gonna be through your, let's say, 30-year mortgage. So it's
okay,
gonna be that
20
rate for the
years.
30 years. Uh-huh. It'll be fixed, let's say.
Fee that you pay to get a lower interest rate.
Mhm. If on the temporary buy down, what that is, there's a temporary buy down of 12 months and it's a temporary buy down of 24 months. Basically, it's let's say that I'm a seller, and let's say my house hasn't sold. It's been on the market for a month, and I've only had two showings, and I'm not getting attraction. They're not People are not interested right now.
Mhm.
Instead of lowering the price, one strategy that a seller can do is tell you, hey, Iris, what about if I give the buyers an incentive of $8,000? I'm willing to give the buyer $8,000 and they can apply it as they wish. They can use it for their closing costs or they can use it for a lower payment. How do you use it for a lower payment? So let's say that the buyer says, you know what, let's do a lower payment for 24 months. That's a 24-month buy down, a 2-year buy down. So you take that seller credit, let's say $8,000, divided by 24 months. So then they bring down the payment $333.
So how much are they saving right there? Like $400?
They're saving
Oh,
333 a
300.
month
Okay,
per
three.
24 months. If they had done it over 12 months, then it would be $600 monthly savings.
Okay,
So what
okay.
happens? Let's say that the seller said they have $8,000. We'll put those $8,000 in an escrow account, like a savings account kind of thing. And let's say that the payment went down 333. Let's say that the payment to start was $2,000. With
Mhm.
these 333, the buyer will pay 1,700 and the mortgage will pay the other 333. So together they make the 2,000 that it would have been originally. So the
Mhm.
buyer will pay 1,700, we pay 333, and he makes the $2,000. And that would be the same thing for 24 months.
It's pretty good, everybody. Do you understand what we're talking about here?
You're
Basically, is say it, Anita.
you're basically using that money that the seller gave you and spreading it out over 24 months. So they subsidize, they help you with the monthly payment. You're gonna put that money that the seller gave you along with your payment, and together it's gonna make the monthly payment for the mortgage. So
Okay. Uh, Anita, can you hear me? I think we have a technical difficulty. I can't hear you. I think the internet stopped. Can you hear me, everybody? Uh, Let me see. Anita, no, no. Okay, yeah, internet issues, everybody. If you have any questions, let me know. We'll wait for Anna to come back. Yeah, she's here. Anna, can you hear me? Yes? I
can you
can.
hear me?
Can you hear me? Yes, I can hear you now. Now we
Perfect.
got it.
Let me
She's
know when
back,
I'm done, and let me
everybody.
know.
It happens. Technical difficulties. Okay, so
Yeah.
you were saying, Anna, that $1,700 will be. Let's say it's a $2,000 payment. So $1,700 will be paid by the buyer, and the 333, whatever, it comes to 2,000. Okay, the rest is gonna be put into an account, and basically you're gonna have kind of like savings that they were given to you by seller as a seller credit, let's say, or a seller help, or a seller buy down points, because you do have an option to use it to lower your monthly payment or to apply for closing costs. Correct, Anna? You can
Correct. To
you can do
apply
that.
towards you apply it towards a monthly payment.
You apply it towards a monthly payment. Okay, so
Mhm.
those are the options that you have.
So
Now,
let's say that the seller gave you $10,000. You
yeah,
can apply 5,000 to the closing cost and 5,000 for the payment. You
okay,
can choose how you do it.
okay,
But
great.
if the goal is to lower the payment, you can do that. Imagine if you do it over 12 months. Let's say that you have that money over 12 months. Instead of $300 savings, you'll be a $600 monthly savings. So what happens?
Mhm.
The goal is that after that period, you refinance. Hopefully, the interest rates have come down by then. You refinance into a lower payment.
That is great. Did
So
you hear that,
it's to help
everybody?
you temporarily.
Yeah, that's why it's called temporary buy down. So usually what we used to do in the past is you will get a seller's credit, whatever amount, 3,000, 5,000, no, I don't know, 10,000. And some people will apply it for closing costs, right? And you will show up to the closing table with a lot less money. Okay. So that's what we used to do before pandemic, 2 years ago. Okay. And then now what we're offering to our buyers, that way you are still out there buying homes, right? Not waiting to see if this is gonna come back to how it was in the past, because no one knows, everybody. I mean, we don't have a crystal ball, we don't know what's gonna happen, but you do need a house and you cannot continue renting, right? So then the idea is that the seller credit that you're going to be getting, obviously the most the better, right? So then you can apply that to your monthly payment. It's kind of like helping you for 1 year to 2 years, right, to have a lower monthly payment. And then
Correct.
after that, Anita, they'll be able to refinance that loan.
Yes. So let's say that you get a 2 year buy down, temporary buy down, but let's say that the rates come down in a year.
Mm-hmm.
In a year you refinance, the money that was left over in the savings will be applied towards your mortgage, so you're not going to lose money.
Oh,
But it's good because you're got right now you're getting sellers to help with closing costs. The prices haven't gone up on the houses, so it's perfect timing. If you wait to buy a house, let's say a year or two, because you're like, I'm just gonna wait for the rates to come down, you there's gonna be a lot of people again competing for the houses, so more than likely they're gonna bring up
the
the,
price.
the prices of the houses again. So you don't want to wait that. You
Exactly. Because now it's going to be the same situation. I mean, you're not going to
they'll
have
be competing again.
the competing, paying probably a little bit higher than a little bit, than the full price. That way you're able to get the house that everybody wants, because
Mhm.
everybody wants it for a reason, right?
Yes.
It's ready to move in. So in this case, I mean, there's no point on waiting, because you do have an option, right? The option is, I mean, and please comment and share on this video. That way a lot of people can understand that there's a way out, right, of lowering your monthly payment. And Cabrales Mortgage is offering, I'm pretty sure, I don't know, there's a lot of things out there, but I mean, they're offering right now a buy down, what's a temporary buy down, which means a lower payment, which
Yes.
is, that is the reason why you notice the market being a little bit slower, right? I mean, because people are thinking, no, it's too high to pay monthly, right? But remember, right now you have the advantage of no competition, right? Plus getting the seller's credit to be applied to your monthly payment. I mean, temporarily, but I mean, it will shift. It continues shifting.
Yes.
Okay. So
Yes.
then let us know your
Any questions? Yeah, any questions you have, give me a call
yes.
or send me a message and I'll be able to explain to you. I can do scenarios for you so you can see the difference on the
Mhm.
monthly payment. There's some people that are saying, you know what, I'm expecting a promotion. Okay, that this is perfect for you because you can buy this now and then when the promotion hits, you'll be comfortable with that payment or you can refinance. So there's options and we can go through them.
Yes, definitely. So then if you're out there thinking about buying and you've been a little bit, not sure what to do, please give us a call. I can, talk to you about the market, I mean, update and what is it that we can offer you for solutions and strategies to be able to get this house. And Anna can explain to you the lending side to see, how we can also help you during these times, right? I mean, that way you're able to buy a house. Anna, anything else that you want to add about this buy down? Because it's something new and I think it's pretty neat, right? That you get that you're able to use that money from the seller to help you at least a year or two and then refinance, right?
Correct. Yes, so we can go over those two options. The buy down needs to be paid by the seller or the builder. The buyer cannot pay for it themselves, but it's something that can be negotiated into the price. So we're seeing more and more people doing that. So it does help so that the buyer gets the house today at the monthly payment that they want.
Yes, yes, the
Yeah.
way it can be more manageable, right, for everybody.
Yeah.
That
The
is
other question we had was about what things do I do on my house that would make it, I guess, have the value, get the money back.
yes,
I guess
yes,
you can talk about that. Because you
yes.
see more what makes a house more valuable.
Exactly. So basically, the other question that we get a lot on is on renovation, right? Should I renovate my house? And to what extent, like how many things and what things to do into my house in order to be able to sell it, or would it sell quicker and for more money? So then the answer is yes and no, right? It depends on the property. But I mean, as per realtor.com, right? I mean, there's a quote that says, I mean, yes, in this market, because we're still in the seller's market, I mean, you still have to be attractive, right, to the buyer. So yes, some respective styles should be applying to your home, but we're talking about some and minimum. Not all of these things that you will add into a property will increase the value of your home or you will sell it faster. Not necessarily, okay? So then, as per what we know, okay, or what I can recommend to you, now all of this depends into your property, right? We need to see the property, and for that we're here, right? But I mean, more than likely, what is the renovation that it gives you the most money is usually flooring. And I know it's a pain, right? I mean, because
Yeah,
flooring,
the
right?
dust and everything.
Exactly, the dust and having to move your furniture. But I mean, that will be flooring, any kind of flooring. Like some people like, it depends on the style of the home. Some people will say laminate, some people will say hardwood flooring, tile, right? Or porcelain tile. I mean, it depends what goes with you into your home. But that's what's gonna add the most value to your home, and that's what we recommend. Now, I know that some of you will say, well, that's too much, that's the most expensive part, and this and that. Yes, but if you don't want to get into the flooring, then the second thing to do will be lighting. What do I mean by that? The light fixtures, you know, the new style, which is, I don't know, farm style. I mean, an example, right? I mean, the black ones, black with gold. Okay, the easiest and less expensive compared to a floor, it will be changing the lighting of the house. So obviously going to the LED light, which is the white light instead of the natural light, and then remove, you know, those flash lighting that we have. They're close to the ceiling. You know, there's some real nice and modern for $20-$30 in Home Depot, right? And same thing as the light fixtures, right? Maybe change the one in the living room or the one in the I don't know, the kitchen counter for something newer. And you're talking about maybe $90 to $150, okay, per light fixture, and it depends what you get. And that's gonna give a totally remodel or renovated look into your property. I mean, really
That's
light,
a new change.
exactly. It makes a big change, right? Another thing,
In the windows.
open the windows also in the scent, and obviously neutralize your house, right? If you know you have a lot of different colors, then try to choose a color that you feel comfortable, but something, usually if they are lighter colors, let's say grayish, whitish, I don't know, not yellow tone, your house will look bigger, totally bigger. So those are the things.
How about landscaping? No?
Well, landscaping will be the curb appeal of your home. So that, yes, but it's not necessarily going to add money into your home. It's just going to be more attractive to the buyer. And it also tells the buyer that the house is being maintained, right? I mean, you have a beautiful landscaping, right? So the landscaping doesn't really add value, right? I mean, what really adds value will be flooring, lighting, you know, that is not that expensive. Maybe, I mean, I'm not talking about quartz or granite because that will be a lot more expensive. Or people ask me, should I renovate my whole kitchen? Should I renovate the bathrooms completely? The answer is not necessarily. No,
You can paint the cabinet, no?
you can just paint the cabinets, you know, a color of your choice. I
Or
mean,
the doorknobs or
and then
the
you can change the handle
knobs,
as
the
well.
handles.
Yeah, but as per realtors, you know, .com, I mean, the Association of Realtors, I mean, what it will give you the most money will be flooring as of now. Okay, but then again,
I know that when we do appraisals, I
mhm,
had one, it was a very expensive house, and the house did not appraise at what the person wanted it. And the reason why was because it had like all the appliances were brought in from England. They were like commercial grade, they were very expensive,
mm,
and those did not add value to the house. Yes, the house was nice, but unfortunately, they didn't get like the dollar for dollar.
no,
So
no,
don't
because
get the most expensive either.
exactly, because remember,
Unless you're gonna enjoy it. If you're gonna do it for you, then do it.
yes, because remember, appliances is considered personal property, but it is not real estate. So then they're not gonna add. I mean, it looks attractive to the eye. I mean, people are gonna want your home because they're beautiful, right? But then you're gonna find some people that says, I don't want commercial grade, right? I want regular electric. I don't even know how to use them. So remember, those things are not really real estate value. It's just it's called personal property, kind of like the blinds and, you know, stuff like that, right? And, you know, professional landscaping. But okay, so the idea is consult with a professional. I mean, if you have any questions about renovating your property because you're gonna hit the market soon, please let us know. We're here to help you because remember, the information we give you, we actually have to see the property may or may not apply to you, or you may not even need any renovations. People think
It
I
depends
need.
on what price you're gonna sell. No, because maybe if you're very attractive price, you're not gonna do anything because you're gonna get investors to come and do it for
Exactly.
you.
So,
Or
so it all depends. And anything else happening in the lending world? I mean, that you wanted to add beside the buy down? Anything else coming up?
I think, like I said, the buy down, the interest rates, what you were mentioning about the competition, we're seeing less competition. We're seeing more seller credit.
Yes.
They're talking about the recession hitting us.
Mhm.
Uh, the recession is, I guess, a friend to interest rate. When there's a recession, the interest rates come down. So there's indicators already in the stock market that shows that a recession is coming. So what does that mean? That means that interest rates are gonna usually come down in the near future. If you see the cyclical charts, you're gonna see that we're due a recession.
Mhm.
But what we're saying is don't wait for that to happen. Why? Because there's going to be an increased demand on homes and that's going to drive up the value. Get
Exactly.
the house now, like we've been saying, marry the house, not the rate.
Mhm.
Marry the house now, get this temporary buy down if that's something that you're interested. You don't have to, of course. If you don't want to, you don't have to. But if you want to get a temporary buy down, you can. And then in a year or two, if the rates come down like they're forecasted, then you can always refinance to a lower permanent rate,
Mhm.
and that way you're guaranteed that rate for the duration of the mortgage. So this is just another tool basically in our tool belt, that it's a tool that you can use if you want to. You can apply that seller credit for a lower monthly payment, or you can apply it towards your closing costs. You choose. We give you the options, and then ultimately you choose.
That is great, great news. Thank you for bringing more tools to our clients that are interested in still in buying. And remember out there, amigos, I mean, if you need to become a homeowner, okay, I mean, you do. I mean, don't wait until the market is going to adjust to you because market will never adjust to what you want. Okay, the market is just is. Okay, we have to adjust to the market. And one thing that you need to understand is becoming a homeowner is going to give you a lot of credits, okay, tax credits, okay, we're talking about that. And not only that, but your equity, right, is going to continue going up. Like I said, not 15% how it was in 2020 and 2021, but right now is normalizing to a 3.8% equity.
The
So
historic was like 3%, so
yes, so
that's
then
pretty good.
you, yeah, you're good. I mean, remember, we all buy houses when the interest rate were 7 and 8, and that was a normal. Okay, and that was back then when I purchased my first house. So then,
I had an open house this weekend, and I had two older gentlemen, and
mhm,
they're from North Texas, and we were talking about the rates and stuff, and they're like, I don't care if it's a 7, if it's an 8. They're like, when I bought my first one, it was an 18, 19. They're like, it's fine. Like they were not concerned at all.
no, it's because you shouldn't. Remember, this real estate, that's when the wealth is, right? And the idea is to have your own,
Mhm.
okay, and
And
build equity.
it's not permanent. Even though you may get, let's say, an interest rate of 6.5, and
Mhm.
it doesn't mean that that's going to be your 30-year rate. You can always refinance if they change. So
Talking
that's
about refinance, Anna, we have a couple of minutes left. I had a client who asked me, when is, I bought my house 4 months ago. When is a good time to refinance, right? So then I
mhm.
said, well, it all depends on, I mean, this is what I answered, right? I mean, it all depends on the loan, right? The rules of your loan. But usually it is recommended in a year, correct? After a year?
Well, I usually ask, what's the reason why you want to refinance? One is maybe you want to change from a 30-year to a 15. So you want to cut years. So for that, you can do it at any time.
Ah, okay.
Or let's say that the interest rates came down. You probably want to see at least half of a percent or at least 1% to refinance because of the rate, so that the savings pay for your closing.
Okay.
Or you may want to refinance because you had an FHA loan and now you have 20% equity, and you want to refinance into a conventional loan and you get rid of mortgage insurance. So
Okay.
there's, you can also do cash out. Let's say that you have a house where you have a lot of equity, you're almost done paying it, or you already finished paying it, and you want money. You have a lot of other loans, a lot of other credit cards with a high interest rate, and you're like, Anna, can I use my house to get cash back so that I can pay off with that money all my other debt? You can do cash out. So there's reasons as to why you want to refinance. It doesn't make sense all the time. I had a customer right now call me and say, hey, I want to refinance. I had a 3.99. Can I refinance? They want to, like, not right now. Let's wait.
Oh, wait.
So there's always reasons why, but
Okay, it all depends on the situation. So then the first question will be, what is the reason? So
was
that
the
yeah, what is the reason? So the good reason is if you wanna shorten the time, I mean 30 to 15. The other one is only if you're saving
saving.
1%, right?
Mhm.
1% of interest rate. And
And
the other
then you
one
can do
is,
mortgage insurance. Let's say that you had a 6% and we refinance you to another 6%. You're like, well, why do I refinance at the same interest? Because you're getting rid of mortgage insurance. So
yes,
that's another reason.
because of the FHA loan, right? Which is the one with the mortgage insurance. Yeah. So
Yes.
then you transfer to a conventional. Okay. Okay. Yeah. So there's plenty of reasons to refinance, friends. So then let us know. Talk to the experts, right? I mean, if you have any questions. And thank you so much for being with us today in After Hours Real Estate. We miss you, everybody. So we're here. If you have any questions, okay, you know how to reach us. Okay, we have Anna with Cabrales Mortgage, Anna Cabrales with Cabrales Mortgage, and I'm Iris, okay, with Momentum Realty. If you need anything, let us know. Okay. And thank you so much for watching. And if you know anyone that will benefit from this information, please share this video. We will really appreciate it. Thank you for being with us, everybody. See
Thank you,
you.
Edie.
Bye bye. Thank you, Anna.
Thank you.